If you become seriously ill, would you want to know that you have a tax efficient way to protect your assets, income, and cash flow? If your answer is yes, then this video is for you. Now, before we talk about the tax efficient way to protect your assets, income, and cash flow, let's look at this particular statistics. And this is information from cancer.ca. And cancer.ca says that in 2019, cancer was the principal cause of death in Canada. Specifically, 30% of people who died in Canada in 2009, it was a cancer-related death. Additionally, 50% of Canadians are likely to be diagnosed with cancer during their lifetime. That's 1 in 2 Canadians. That's a striking statistics. One good thing, however, is that 75% of those who are diagnosed will survive. And this is just cancer. We're not talking about strokes. We're not talking about heart attacks and all the other serious illnesses, right? And if this one illness is affecting Canadians this much, you can only imagine when you put all the others together how significant the impact is. Now, next question you may be asking yourself, well, how would I survive financially if I had a critical illness that affects me for 12 months, for 6 months, for 24 months? And of course, what may be coming to you is that there will be interruption or reduction in your income, in your cash flow. Quite frankly, if you have a business, it may just mean your business goes bankrupt, or your self-employment just completely implodes and it stops. There's no income to get there, right? And you may say, well, I may be able to deplete some of my investments. I'll withdraw from my investments. Well, just know if you pull from your RSPs or your RIFs, it's going to be treated as ordinary income. If you pull from your non-registered funds, you have potential capital gains. So in addition to pulling money out, you're also going to be paying taxes. Now, the other thing you may be saying is, well, I survive. Once I get past the 6 months, the 12 months, the 18 months, whatever it is, I'll be fine. Well, that may be the case, but for many people, that's not necessarily so. Many people have diminished work capacity, which causes long-term financial implications. If you're a specialist, if you're an expert, especially if it's something physical you do, and a critical illness affects you to the point that you no longer can do that, it may mean that you have to change your career, or the job and expertise you have, you no longer have that. So you may be an expert in say, for example, a brain surgeon. I'm just making this up as I go along, a brain surgeon. Well, if you no longer can perform at that level, you may just consider being a family doctor. And a family doctor may make decent money, but it's not the same as a brain surgeon, right? So the same may be if you have certain diminished mental capacity as an expert, where you're able to charge top dollar based on your performance. No, that amount will be decreased because you can't perform at that level anymore. These are all things to consider. So your next question is, okay, so what solves this problem? And the thing that can help your situation is what's called a critical illness insurance. And I'm always surprised by how many individuals do not know what a critical illness insurance is, even though they have spoken with financial advisors in the past. A critical illness insurance is a policy providing tax-free lump sum payment if you're diagnosed with a serious illness or condition. So you may be saying, okay, but what conditions are covered? It depends on the policy. It depends on the critical illness insurance contract that you are about to sign. You could have a comprehensive policy which covers, as many as, say, approximately 26 different illnesses, or you could have something that's less comprehensive and covers, say, 6 illnesses. Again, you want to make sure that you're working with a professional and you do the proper needs analysis to understand what exactly you're getting. The conditions covered are typically cancer, heart attack, stroke, etc., etc. The thing is, again, there are approximately 26, so we're not going to spend the time in the video going into details about it. I think this is obviously something that warrants a conversation with a professional, but just know that it covers a lot of different illnesses. Now, critical illness. A lot of people think, okay, so does it pay if I die? Critical illness, the base contract, really at its core is a living benefit. That means if you survive from somewhere between 0 to 90 days, again, based on a contract, you will get that lump sum tax-free payment. It's based on a survival period. Now, there are ways your beneficiaries can receive funds if you have passed while the contract is in place. I will talk about that shortly. But at its core, critical illness is a living benefit for when you get a critical illness during your lifetime. Now, what can you do with those funds? You could use those funds to pay for any expenses, including living costs, home modifications, vehicle payments, alternative treatments, family support. It's funds for you to do with whatever you want to do with it, right? Now, I'm going to talk about a rider. It's called a return of premium. You may be saying, what is a rider? Well, remember we spoke of the base policy. The base policy is the critical illness coverage, and it tells you how much you will get if you have a critical illness, the lump sum amount that will be paid. But you may get some extra benefits, and that benefit rides on that base contract. And the one I'm going to talk about today is called a return of premium. So one benefit is a return of premium upon death, where your beneficiaries receive all returnable premiums if the insured passes away during the policy term. So you have not used the policy during your term and you die. If you have paid for this rider, then all the premiums you've paid will go to your beneficiaries. Another one is a return at policy expiry, which means the premiums are refunded if the policy term ends with no claims. And I always say this is great for individuals who hate insurance, because some people complain about insurance, particularly term insurance, and they say, well, I pay term insurance all the time, or I pay car insurance all the time, and I never ever claim on it, and I feel like it's money that's just gone. Well, here, if you have a return of premium at policy expiry, the beautiful thing is if you go through the entire policy, the term of the policy, and you never made a claim on that policy, then all your premiums are returned to you. So for a lot of people, they're quite surprised that this even exists. And just know that it's not a popular thing. To my understanding, I don't know if it exists outside of Canada. It's one of the benefits of having critical illness here in Canada, right? And there's also a return of premium on a particular term, meaning you may set it for, you may have a policy that goes for, say, 20 years, but you have an option for return of all your premiums after 15 years, a particular term, right? So the beautiful thing about return of premiums, especially on expiry or on a particular term, if you go for a particular time period, you have made no claims, you get all the money back. Or if you have a claim during the term of the policy, then you get paid the tax-free amount. So it's almost like a win-win proposition. So critical illness insurance, a vital and important part of your financial planning. And the beautiful thing also, it's that it's tax efficient, because when you receive that money, it is tax-free at an individual level. There are also options at a corporate level that's a little bit more advanced, and I'll probably deal with that in a different video, but hopefully this is helpful to you. And if it is, like, share, subscribe. And if you know someone who could benefit from this, don't keep it to yourself, folks. Share it with someone who could benefit from hearing this. It's only just over 8 minutes. All right? Until next time, take care.